Wide shot of a global map. Narration. Most people believe a weak currency is proof a country is weak. Close-up of US dollar and other global currencies. That's the story repeated in the West. Powerful nations have strong money. Broken nations have worthless money. Visual of yuan coins. But what if that idea is backwards? What if keeping a currency weak is deliberate? China map with 1970s timeline overlay. China proved exactly that. For decades, it held down the value of the yuan. Not because its economy was collapsing, but for leverage. Archival images of Mao's Cultural Revolution chaos. To understand why, rewind to the late 1970s. China was emerging from decades of isolation and chaos. Empty factories. Poor rural life. Its economy was sealed off. Population poor, and factories outdated. Portrait of Deng Xiaoping. Then Deng Xiaoping took power and flipped the script in 1978, opening China to global trade. Coastal factories emerging. Foreign investment was welcomed. Coastal cities became industrial hubs, and the mission was clear: industrialize fast. Graphics showing rising exports. But how does a country starting far behind sell goods to the world? You undercut everyone on price. Close-up of currency board, and the fastest way to do that isn't labor alone. It's currency policy. Animation showing exchange rate movement. Imagine the yuan's natural value is 5 per dollar. In a free market, exports would push it higher, making goods expensive abroad. Central bank visual. China stopped that. Its central bank held the yuan far below where it should have been, sometimes near 8 per dollar. Animation of dollars flowing into China. How? By buying dollars from exports and increasing yuan supply, growing stacks of foreign reserves. Those dollars didn't disappear. By mid-2010s, China's foreign reserves approached $4 trillion. Factory lines, workers producing goods. Result: yuan stayed cheap. Products stayed unbelievably cheap. Global consumers couldn't resist. Nika-style sneakers on conveyor. Think of it like a company selling products far below value. Short-term, profits shrink. Long-term, competitors die. Animation. China dominating global market. That's exactly what China did. Not for today's profit, but to dominate tomorrow. Factories multiplying through decades. Through the 80s, 90 segundos, and early 2000s, factories multiplied. Ports expanded. Trade surpluses exploded. Walmart shelves stacked with products. Western consumers celebrated cheap electronics, clothes, everything. Big retailers became monuments to globalization. Dollar bills moving from West to China. But the real shift was invisible. Dollars earned were recycled into US debt. America bought cheap goods, then borrowed the money back. Visual contrast: happy consumers versus empty factories. While the West focused on bargains, China accumulated power. Graphic: weak currency does not equal weak country. A weak currency didn't signal weakness. It signaled patience, infrastructure, and industrial growth in China. China used the cheap yuan to buy time, build infrastructure, modernize industry, lift hundreds of millions out of poverty. Industrial cities, busy ports. By early 2000s, China wasn't just exporting toys and textiles. It became the backbone of global supply chains. Political illustration in US accusing China. Washington accused Beijing of currency manipulation, and technically, yes, they intervened. Animation. Cheap exports hollowing Western factories. Cheap Chinese exports hollowed out factories across the West. Manufacturing jobs vanished. Consumers shopping happily. Consumers enjoyed bargains in the short run. Economies paid the price, long term. Dollars looping from US back to China. China sold cheap goods, earned dollars, used those dollars to buy US debt. America criticized China while depending on it. Dollar versus yuan split screen. In the West, strong currency equals badge of honor. In China, weak currency equals tool. Industrial montage. Factories, logistics, skilled workers. By giving up prestige, Beijing gained real control. Trade tension graphics. Tariffs. Protests. Strategy wasn't risk-free. Yuan control sparked tensions. Tariffs and threats followed. Gradual appreciation of yuan graph. By mid-2000s, China slowly loosened its grip. The cheap yuan had built the ladder. China had climbed it. Subsidy animation, industrial goods, exported cheaply. Playbook evolved. Industries, not just currency, subsidize heavily, flood markets, crush competitors, steel, solar panels, EVs, visuals, short-term losses, long-term dominance, same logic as the yuan strategy. Modern yuan, digital currency graphics. Today, yuan floats, is IMF reserve currency, and China pushes for monetary independence. Global map with trade flows. Beijing aims for a world where the yuan is trusted globally, not reliant on Washington. Weak currency, geopolitical power animation. A weak currency can be a weapon. Sacrifice prestige for substance. Western consumers versus declining industries. Consumers enjoyed cheap abundance. Industries eroded. Debt grew, financed by China. Exchange rate boards highlighting strategy wins. Lesson: don't judge a country's power by its exchange rate. Weak currency y no igual a doble weakness. Sometimes it's strategy. Historical money examples: Rome, Spain, US. History rhymes. Empires have always weaponized money. China industrial montage. China's weak yuan built an empire. Different tools. Same game, money is always power. Closing. Subscribe. See if this changed how you see the world. Subscribe. History explains the present. If you know where to look,